thanks everybody for joining, listening in to the podcast that we're recording right now for the Future of Banking event. I'm Alex Schoonkind from Form 3, pretty Dutch name as you can hear from the pronunciation. I'm heading up the European expansion for Form 3. If you don't know Form 3, Form 3 is a company established 4 years ago. We've built a cloud payments platform that enables licensed institutions to get access to payment schemes, clearing and settlement schemes in different ways. And we thought it would be a good idea to introduce the audience to the different access models that are out there, because it can be quite confusing, especially for a starting company that wants to offer something in the neobank space. What kind of access models are out there, depending on the jurisdiction, on the geography as well, and why you should pick a certain model when thinking of your product. We've had a lot of experience with dealing with complicated banking infrastructure, and I think these guests will kind of allow you to learn more about the different access models because they've built companies on top of these access models. They've also experienced other models, so they can maybe comment on the pros and cons of the different ones. And I think as a company, you should always think about your growth trajectory and not only think of the present, but think of the future as well when making a decision. We invited 3 companies, PPS, Ziglu, and N26. I'll let you guys introduce yourselves. Over to Miri.
Thanks very much, and thank you very much for having me. Just brightening up a bit of the life in a lockdown, which seems like it's been going on forever. My name is Miri Betinova, and I'm heading the strategic sales at PPS. Formerly, we were known as Prepaid Solutions, and then we thought, let's get creative, let's rebrand. What can we turn Prepaid Solutions into? Turned out to be PPS. Great. One of the major drivers behind that was to kind of remove what we felt like was a building preconception that we purely in the prepaid space. As a business, we processor, issuer, and e-money license holder in UK and also in EU. We have a brand new license from our newly established entity in Belgium, sponsored by National Bank of Belgium. And really, as a business, we, although we like to say we play in the fintech space, which we absolutely do, we would be considered a bit of a grown-up fintech. We've been going for 20 years now. And really, it all started with a very simple prepaid student card / plastic. And then over the years, as not only the technology was evolving, but the way it was impacting people's day-to-day lives and how do we deal with stuff. The basics of, how you get your food, how do you deal with your travel money, all the way to how do you manage your day-to-day banking, which really now is just an intuitive push of few buttons on a mobile phone. We've been and constantly are on this road of an evolving product roadmap and the services that we do offer to our customers. So really, in terms of what's the best way to describe, although it might sound a bit cheesy, is a one-stop shop, which is essentially what we are. You can come to us for transactions processing. You can come to us for transactions processing and a BIN sponsorship. We are principal members of MasterCard and recently been accepted as principal members of Visa. And that's undergoing project now. And we've got an e-money license. So it's really trying to work on a model where you can come to us for the lot, or you can play the pick and mix game, really in line with where you are as a business, as a startup already. Are you literally just finishing drawing on a whiteboard and you kind of want to get going and don't know where to start? Are you already a fintech that's been going for a while and requires a expansion? In which case, let us help you to take you to new territories, provide localized IBANs. Or if you're a business that's just purely now needs scaling up, and you might have some internal capabilities and your own licenses already, but in order to get to the next level, you just want a bit of a grown-up brother, big brother next to you that's going to give you a helping hand and help you get up the ladder.
So what do you? So I think so. Miri is kind of representing two models in this talk. The initial one we're talking about now is kind of the license model, where PPS carries the license, and you as a company, as a new startup, wouldn't need to get licensed, right? So, Miri, in your experience, what are the main drivers for companies that contract with you? I think a good example is Moniz, for instance, for going that route, basically, and choosing PPS.
Yes, that's a great example. So you could look at it as a new startup. You just managed to your fundraising, and you know you need to get to the market, and you need to get there fast, because the objective you need to demonstrate to your investors is how quickly can you gain a user audience. Now, if you want to do that, and you don't want to waste time, resources, and in particular loads of time in getting your own licensing. So you get going with someone like PPS, you become an agent of PPS, utilize our licenses, take our tech, in particular the processing. And then as the time goes on and you hit your first goalpost, which is certain milestone in number of customers, you decide, okay, now is the time to raise more funds and get our own license. And then you peel that part of the services off. Alternatively, you can be someone like Moniz, who came to us 2 years into their trading and existence with a healthy customer portfolio. And the objective was, okay, we kind of made a dent into the UK market. We need to go to Europe, and we need to go to Europe fast. And then the third step is, right, we are now in Europe, we're in UK, but we've got users in countries where having a localized IBAN is seen as a preference. So let's take that step, and let's use your licensing for those kind of elements. But at any point throughout this process, you can make the choice. Do I now become a principal member myself? Do I get my e-money license? Do I now turn away from the licensing model to a tech model for pure transactions processing?
Okay, yeah, very clear, thanks. I think that kind of leads us to the next guest, which is Mark Hipperson from Ziglu. Mark, if you could please introduce yourself and explain a bit of what you're currently busy with, and etc.
Yeah, hi there. Mark Hipperson, I'm the founder and CEO of a company called Ziglu. We're a new challenger that does a currency account. We do crypto, and we do foreign exchange as well. We've gone through the model of build our own banking platform from scratch. I previously did that when I founded Starling Bank a few years ago, where I was CTO and founder of Starling Bank. So I followed the model of building a banking platform a couple of times now. This time we're going through our e-money licensing rather than our full banking licensing. But I also was CTO of a company called Centric, which used a similar platform to PPS. So I'm aware of what those guys do and the benefits and advantages of that as well.
And why did you specifically choose this model over the other two, I would say?
Right. So whilst
Don't hold back.
Well, I guess to the original point, we were looking some way forward, and there's 4 companies in the world that have built a banking platform from scratch in the cloud, Starling, Monzo, Revolut, and ourselves at Ziglu. That gives us a competitive advantage in terms of our ability to be able to make changes and enhancements and own everything. So having that core ledger, that core database ledger, which captures all the transactions, and then we integrate to our cards, our KYC, our AML, our currency, everything integrates into that one hub, gives us total control, gives us speed to market, gives us ownership of our IP. So that's whilst Mimi's arguments are well made, absolutely, that's a model for many companies. We were looking forward and thinking, okay, well, we know how to do this. We know how to go through our licensing process. We know the benefits of having ownership of our own core ledger and what that gives us in terms of the competitive advantage in the marketplace. And we decided to do that, to give us that competitiveness, and know that ultimately through subsequent valuations and which are important, or subsequent series of funding, valuation is important, and valuations to an extent, it's not true in all cases. So N26, we'll be about here later, have done very well in terms of the valuations sitting on Mambu. But we felt that having our own platform was an important thing to do, to be able to support having our own IP, support our scale, and do things really quickly. So if we need some development done and we need a new feature quickly to respond to competition or to get into the marketplace on something that we think is a competitive advantage, we can get that done really quickly with our own development team in a number of days rather than a number of weeks or months.
Yeah, because obviously you had a head start, right, by having gone through it all, right? That makes the decision, I think, quite a lot easier. Do you still see the value in getting a proper, I would say, banking license, or would you see that's no longer a necessity to be successful at all anymore?
So when I did Starling Bank, I think we were the first bank in the world to launch a cloud-based banking platform back then for current accounts, and it was a unique proposition in the marketplace, and it was the right thing to do to get a banking license back then because very few had achieved it up until that point. But here we are 5 years later, it's 2020, the market's moved on, PSD2 is in place, open banking is in place. Those the reason why those that legislation changed and the EBA brought that in through the respective local regulators was to empower fintechs to compete more readily with banks. Current account switching wasn't working, as we know. You weren't going to go across the road from Lloyds to Barclays because they're as bad as each other. So competition was important, and I think what's happened with the legislative changes, it's introduced more competition. It's a very active and dynamic marketplace, especially in London, but obviously Berlin, where N26 is based, is pretty dynamic too. So we felt that here we are in 2020 with open banking, with PSD2, we don't need to go through our banking license. That does bring a degree of challenges in terms of what one can do and what can't do. You can't offer crypto if you wanted to as a bank in the UK or Europe at the moment. You're not allowed to. But through an e-money license, you can go through the 5 MLD registration process and provide both those two capabilities. So that's what we're looking to do. So to start with, it's a modern currency account platform with your currencies, your sterling, your other currencies together with crypto. But in due course, we will look to evolve it to provide all the functions and facilities a bank can offer in terms of accounts where one can earn interest. You can go over drawn loans, but we'll be doing that through integration with third parties through open banking, and that way we get to have it's not the full banking license, which is the highest level of regulation under the PRA, of course, and a very important step in terms of achieving that level of compliance and risk management. But we feel it's important that we can also offer a range of different features and functions, and why wouldn't you take advantage of the marketplace and open banking? So a modern financial services company doesn't necessarily need to be a bank, and hence the reason why in 2020, when we're launching, as we are doing on Friday, fully, we're taking advantage of open banking.
Yeah, I fully hear you, and I think open banking is a separate topic. I think we are all believing that it might eventually replace cards, even on a point of sale level, right? If it gets fully developed across Europe, I think that's the goal of the European Union. So that needs a little bit of more of a maturing, I would say, looking at reports from the likes of Tink, etc. But I think it's slowly getting there. At least the UK is a bit further along, I would say, than the rest of Europe. But I think it's getting better. And finally, for this segment, what would you give as advice or takeaways for companies looking to get into this kind of model? I mean, are there any hurdles you've encountered before that you now know how to tackle?
Yeah, well, there's a range of challenges. I mean, the PPS model is a more straightforward model to get into. If you haven't done it before, you're not a technology business, and you want to put a product out there. The PPS model is a very straightforward model to follow. The banking model is a hard model to follow. I mean, it's not dissimilar to going through your e-money license. It's 6 to 9 months of solid hard work and a lot of onerous but necessary compliance steps. And even with the banking model, with the e-money model, you have to go through a decision whether you buy or build your core ledger. As we covered earlier, there's 1 or 2 vendors out there that do a great job in terms of providing that core ledger. Mambu's one used by N26, I'm sure they'll cover themselves. We could have gone that way with what we're doing, but we decided to build from scratch again to give us that competitive advantage we believe it gives us. That's the harder decision, really. An e-money decision is for me the obvious thing to do nowadays. Because of open banking, you don't need to be a bank anymore to provide those types of features and functions, and you can do that through open banking. But you still have that decision to make whether you use a ledger from a Mambu type company, or you build it yourself. The building itself is quite a hard thing to do. As I said, there's not many fintechs out there or banks out there that have done that. That's the harder decision to do. But for me, it was the sensible middle ground between being a full bank and not being able to do crypto, and why in 2020 don't you want to do crypto? Because it's happening now. I think it's a bit like the whole cloud conversation of 5 years ago, when at Starling Bank we were having all the tough conversations with regulators to say, look, we think the cloud is the right place to be. It's safe, it's secure. All those conversations are obviously old school now. Everybody knows it's straightforward.
Not everybody knows, but yeah.
Well, I think it's generally accepted anyway. So that was a pain barrier that we went through then, and now there's the pain barrier of crypto, and the acceptance of that is largely being won now, we believe, as well. So, if you're launching a modern financial services business in 2020, it needs to do crypto, it needs to do foreign exchange, and it needs to offer normal sort of currency account services, sort code account and IBAN, etc., which we will do. And we don't need to be a bank to be able to do that.
Yeah, makes sense. Good advice. I think, I'm not sure about this, but is there a difference in getting the e-money in the UK compared to any European country?
Well, good question. The barriers to entry should be as high in every business, in every country. The FCA are great, and have been very supportive. I've gone for a banking license with those guys, with Starling, an e-money license with my last business, Centrip, and we're going for our e-money license now with Ziglu. It's hard. Their expectations are hard. They want to make sure that you do everything in the correct way, and that's what you'd expect, because you're dealing with other people's money, and you've got to make sure it's safeguarded and protected, and everything that you would expect to be important in terms of looking after other people's money, you need to do. So those barriers to entry are really hard, but they should be the same in every country across Europe. Now, whether they are or not is to an extent one's own opinion. But I know from experience, some countries are a little bit earlier than others, easier than others to perhaps get some licensing. But I'll leave your viewers to determine which ones they are. But we decided to go to the hardest one, which is the FCA, because if you can do it there, you can pretty much do it anywhere. But obviously, an e-money license allows you to be able to issue money across the whole of Europe. The challenge is N26 finding out in the States is expansion into different jurisdictions where you have different licensing, and that the US is hard, of course, because you've got state-based licensing, which we're planning to do in Q4 this year anyway.
Okay, thanks. I would think that Max has a few words on where the hardest country is to get a license, because I think Germany also is taking aim for the #1 spot there as well. Thanks very much. We'd like to move on to kind of the next model, which I think we call, the UK coined the phrase DCNSP, which means directly connected non-settling participant. I think the UK legislation, although the payments infrastructure is older than Europe, the legislator is a little bit further along and a little bit more liberal, allowing financial institutions and e-monies to directly connect into the faster payment scheme. And so that's what a lot of larger fintechs are doing, and it's a logical, I think, trajectory in the UK. It's one that N26 also followed, and that PPS also followed, and the advantages are numerous. So I'll let Miri explain to why they moved to this model and what you started off with and why you moved into the DCNSP model.
Yeah, sure. Thanks. I think, like you said, Alex, it's becoming almost a hygiene factor that you're connecting to the scheme, and you make the faster payments even faster by essentially making them instant. And we're very glad we took this step in partnership with Forms 3, and all of our customers, existing and new coming, are benefiting from this connectivity. And what we have seen, it's really broadened for us the sort of type of customers and programs we able to serve. So for us, fintech is no longer just a matter of serving a challenger bank, a neobank, the likes of Counting Up Bonnie's, Coconut. It's about looking at different parts of individuals' financial services life, and that they're utilizing for example, pensions and mortgages. Those are maybe two parts of financial services you would have never really considered as, well, can we give this a fintech makeover? Can we add a value? Can we speed things up for people? Because you kind of think mortgage, okay, well, that's me done for the next 30 years, bit by bit. And yet here we are working with a very interesting startup that's trying to utilize, in particular, our connectivity to the faster payment scheme network and help individuals to get rid of that burden, big financial burden they have in their life. The same with pensions, the same with micro lending. So all of a sudden, we took ourselves out from just here we are to help you launch a challenger bank to here we are and help you deal with other aspects of your financial life. Also, it's quite a straightforward integration for our customers. It's all done through a set of APIs. The connectivity already exists there between PPS and Form 3. So it's really just a matter of very easy configuration, connecting to the PPS platform, and you get to benefit from these services and all the other services we provide to customers. So it's really always looking at the product roadmap and looking at the next aspect of people's financial services and their lives. Where else can you add value? So it's really important for us to work with customers who have a vision of their roadmap, product roadmap, customer acquisition roadmap, but we have to be able to do the same, and we have to demonstrate this to our customers. And by taking steps like adding the instant faster payment services or adding Apple Pay, Google Pay, really shows to our customers that we able to keep up with their end audience and at the same time be still flexible enough. And once again, it brings me back to the point of, if at any point you do decide to take more on your plate, then it's quite a straightforward way of reorganizing the model and the program setup.
Thanks. And like moving to a DCNSP model for PPS, I mean, do you have an idea on also like the pros and cons of the model, right? Because I know a lot of people are considering it, right? But there's bound to be some cons against it as well. Maybe some more oversight, for instance, from the Bank of England. Not a lot of people know that it's actually also possible to do so within Europe, right? Within Instant, with RT1. There's also the possibility to be directly connected and have a settlement bank in the back. But do you have any ideas about what PPS considered before moving to that model?
I think there would always be that kind of consideration. If you go down, everything goes down in real time, right? It's kind of, you could have this service that's down and then you just might be in luck that you missed that 20-minute batch window, and some of your customers might never see the negative impact on the services. Whereby in this case, it's just that if it's happening, everybody knows it's happening. Also, probably some might be viewing, well, why connecting to this model? You essentially do put yourself in the hands of the very few top 5 banks in this country or another legislation. And then essentially how you are different from just being working with the large banks. But I think the pros definitely outweigh the cons. And for me, the only con I can think of right now is just that impact on a technical performance if there is a glitch.
Okay, thank you very much. I think a lot of companies, from what I see at Form 3, is that it's a logical, I think, growth trajectory for companies, at least in the UK, for sure, that once you reach a certain amount of transactions, and I think Bank of England projects around 1 million transactions a year, when it starts to become interesting to own more of the value chain, right? We see a lot of companies kind of wanting more ownership and guarantees over the actual payment. If being direct to scheme obviously allows you to receive scheme messaging as well. And I think just gives you a lot more control than having to deal with a lot of the times aging bank infrastructure or non-perfect bank infrastructure on your end. I think it would be a good introduction into Max from N26, because N26 basically went through the entire journey of from unlicensed to full bank. So Max, I'll leave the floor to you to introduce yourself and explain a bit about how N26 kind of matured.
Yeah, thanks, Alex. So quick one about myself, Max, Director of Business Operations at N26. As you rightfully said, we're a fully licensed bank now, operating in all EU member countries. So we have the license in Germany, but passported to all the other countries, and also active in the US, where at the moment we don't have a license. We basically work with a partner bank. As you said, Alex, we started the product a bit more than 5 years ago, early 2015. At the time, didn't have an own license. Worked with Wirecard Bank, so they were basically the bank partner. They were the processor. They were the issuer. One-stop shop, so to say, for us. Reason for that was very simple, right? We didn't have the resources and the knowledge to build anything of this. We needed a partner that we could work together with, that we could just get the product off the ground, and that we could launch something with. And then what we basically saw is that the product was a great success, but that especially expanding the product, especially expanding to new markets, became more and more difficult because you always had to rely on a partner, right? You had to rely on the speed of the partners that you were working with. And then we decided to get our own banking license. I got the license in July 2016. Then obviously it took some time to migrate all the customers to the new platform. But basically since early 2017, all of our customers are on our own platform. And I think maybe to add to the point from before, I think it's very much a matter of which size do you have and how much dependency do you want to allow yourselves from external partners. So when you build your product, and for us, the decision was clear that we were aiming to get enough customers for banking license to make sense. And at the moment, we have 5 million customers here in Europe, and from our perspective, it was definitely the right decision to do that.
Thanks. And how was your experience in the UK, where you entered the market on an indirect money, right, and on the indirect license, right, and then later moved direct to scheme?
Yeah, I mean the UK was an interesting one, right? I mean we decided to go.
I can see Mark smiling there.
Yeah. Like I'm sure we had a few good laughs, right? I mean, obviously Brexit made things quite complicated and all the shuffles about that. So when we went to the UK initially, passported our license from Europe. So that's a very straightforward thing, right? I mean, it's essentially a one-pager that you fill out. The authorities look at it, but given that we're a licensed bank, that was from a regulatory perspective not an issue. And
is that the same process, by the way, as passporting within all the European countries?
Yeah, exactly. It's pretty much the same process. There's just a different local authority looking at it.
Yeah. Okay.
And then the second question was how do we integrate to the payment schemes? Obviously, the challenge here being that we're dealing with a different currency, so the implications on how the general ledger works, the implications on treasury and whatnot. Yeah. And we said, okay. Let's start with an indirect participation because we won't have massive size immediately, and then move to a direct sitting participant as well. But given all the changes that Brexit brought with itself, it became clear that we had to basically build a bank again in the UK if we want to operate there as a bank. We can't use the license anymore. And then in the end decided that from a commercial perspective, that this doesn't make sense. I'm sure the UK customers have great opportunities, great banking partners anyways. And we said, okay, it doesn't make sense for us to get a banking license again in the UK, to make all the effort, to have all the staff running there. We rather want to focus on our European or our EU business. I mean, UK still being European, but on our EU business and US business.
Yeah, because that leads me to the question of course, if you would go for the initial model like unlicensed, I think it's easiest for a company just to focus on their product and not care about, passporting or licenses, because you're dependent on your partner to take care of that, right? And a lot of these partners have licenses and solutions across the globe, so you wouldn't have to think of it. Next up being, of course, having an e-money, but then having to make sure that if you have, plans for global domination, you would have to kind of see if the major jurisdictions support your model, right? And it would allow, for instance, crypto companies to get a license in that local jurisdiction. And I think then with N26 having a bank license and likely providing services that would only be allowed to be offered by a proper bank, how do you see that going forward when expanding across the globe, basically?
Yeah, absolutely. So I think there's 2 questions. Like there's the licensing question, and then what infrastructure are you building in the background, right? And I think in terms of building the infrastructure in the background, you can have a very forward-thinking approach that foresees how many markets that you want to go in, that foresees how you want to work with different currencies. And I think that's the perspective we have on building the infrastructure itself. Now, when it comes to the license, you're absolutely right. This is a very local thing. In the UK, it was especially in the US, it's very different from what we're seeing here. We're currently also still working on a Brazil expansion, which again is a different one. So I think there's two things you want to consider. Like what licensing model is realistic in a given state, given the size that you expect to have after, let's say, X time, 1 year, 2 years. That's also why in the US, we said, okay, let's not get a banking license from the start, right? Let's work with a banking partner. Let's see how the market actually works. So let's learn from the partner like we initially did here. I think there's always a huge opportunity if you work together with partners, because ideally you choose one that's very good at what they're doing. And that means you'll be able to see how the local jurisdiction works. How does the exchange with the regulator work, right? What are all the things that I have to think about? And then can take a much more conscious decision after, say, 1 year's time on whether you want to make that investment or whether you think it makes sense to go with a different licensing option or to stay with those partners in the long run. Yeah, I think it gives a bit of an airbag that takes the impact of getting the license right away from you.
Yeah, I think the most interesting question is, I think for all of the panelists, I think maybe the answer is that how do we view the US, right, and its licensing, and I think it maybe applies to Mark's model of crypto, but also the license in general, because it's the biggest market after Europe, right? So you launch in Europe, successful, you realistically want to be successful in the US, right? Because it's just such a big market. I mean, what are your views on that?
I heard a really, really interesting thing that's been said at the Finovate Europe, even in Berlin early in the year, when we were still allowed to go and see other people, where lots of European fintechs go to USA first class and return economy. So I think the fact that, you know, you can conquer Europe and you can conquer 26, 27 countries on the back of one license is and should by no means be an indication of how to approach US, just because of the different legislations there, and it's so vast, but also of the way people perceive financial services there, people use financial services there. I think it's still really way away from how we interact daily with our money, because essentially that's what it is. It's an interaction with your money, and I think people made a really big change and a leap of, you almost were like sometimes a bit scared to look at your bank account just in case there was that anxiety, well, am I going to realize I'm in a bit of a pickle here with my finances? Whereby now people on average check their phone, unlock their phone and their banking balance 15 times a day on average. So we have undergone that huge transformation. So I think it's still, and I will congratulate hugely to anyone who's going to be first to really unlock the US model, and but they won't do it. They won't be able to do it by trying to apply the European expansion model, in my view.
Mark, any thoughts?
Yeah, well, I was in San Francisco last October. I was having a burger off Union Square, and a bus came past me with N26 all down the side of it. And I thought, oh, I'm glad to see you guys over here. I knew Monzo and Revolut were over there trying to break it over there, and you know, they're adding 250,000 customers a month, which was pretty impressive. I don't know what they're doing now, but they were. And N26 are over there as well. So it's competitive wherever you are in the world. N26. So yeah, I think the point's well made in terms of the US are a little bit behind where we are. I mean, 4 or 5 years ago, when all the challenges launched, you know, we'd like to think that we changed the demographics, the 25 to 45 demographics relationship with their bank, and you moved it to a far more positive relationship, whereby you actually get notifications, you do interact more. I didn't know the stats of 15 a day. I think that's that I hadn't got the exact numbers, but we know that after social media, your banking app is the app you interact with more than anything. Every time you get you pay for something on Apple Pay, Google Pay, Samsung Pay, or your card, you get a notification. You know when money comes in, you know when money goes out. It's it's a very interactive app nowadays, and we put you, the user, in charge of your money for the first time, which was totally different to the horrible brown envelope moment of 10, 15 years ago when you used to work out how far overdrawn you were, and it was a horrible experience. And we've shifted that, and I think that's a great place to be. And the American market is a bit different. I mean, but it is still a bit old school, and I do genuinely think that the European banks over there will make a difference. I think they will be successful over there. The market is big. It's hard because of the licensing in each state. But the California state is where most have decided to start, because they're quite fintech savvy or tech savvy. Maybe not fin savvy, but certainly tech savvy over there. So yeah, it's an obvious market to go to. Certainly, if you're a I can see why N26 have done it. I can see why Revolut have done it, because they've dominated Europe for a while, so they're over there. So it's a natural expansion. If you want to add, if you're targeting tens of millions of customers, it's a natural market to go to. And I do think our banks over there, or our fintechs, obviously Revolut's not a bank as such, certainly not in the UK market. They will thrive and they will do well, but it's going to be a hard period, of course, to do that, and it's not going to happen overnight. But they are making traction, to be fair. So yeah, good luck to them.
Yeah, it's funny because often when we speak to American fintechs coming over to Europe, they always say like the shores of Europe are littered with the bodies of American startups.
Yeah.
Because most of the times they're just used to having a monoculture, like paying culture, and then having to adjust per country with all these different types of ideas about credit, debit.
Yeah, exactly. And if you look at the world's best challengers, there's Revolut, there's Starling, there's Monzo, there's N26, and I'd like to think Revolut will be Ziegler will be there soon. They're massively impactful. They've made a real difference to people's lives over here. And that will translate in some way across the pond, I'm sure. But we've been hugely successful in Europe. And remember, it's because of the changes that were made over here, the legislative changes to allow that competition into the marketplace, that has meant that we're able to do that. And that's a great thing about the European, the changes post 2007, 2008, the PSD2 changes and all the different legislative changes to fast banking license that Starling and Monzo and Atom and Tandem and Openwolf and all those guys took advantage of. It's really, really changed things for better for consumers over here.
Yeah, I agree. I fully agree. What have you guys learned so far that you think should be improved overall? I think from a legislative perspective, or what have you seen as kind of being a hurdle and would you like to have changed?
Well, well, if you don't mind me speaking first, I've got the mic at the moment.
Sure.
The regulators are tough, and they, as I said earlier, they should be tough because you're looking after other people's money, and I really wouldn't want it to change much. I expect the barrier to entry to be pretty hard to get. I mean, using PPS allows you to act as effectively an agent of those guys who've got a license, which allows more entrance into the marketplace, and they're protecting your money themselves, of course. So that model works well. You do an e-money license, that model works well, and a full banking license, that works. So in Europe, I think, from my perspective, the regulators are tough. The process is onerous, but you get the right sort of challenge. And when you come through with your license, with the scars, you deserve it, and you are in a better place than when you went into the process of knowing that you can do the things that you need to do in order to make sure that people's money is protected and safe and secure. So I think it's about right, certainly from the perspective of Europe. I can't really talk about America. I've not been through that process yet, but I know it's about right over here from my perspective anyway.
Maybe to add to that, like from a license perspective, I think I agree with you, Mark. But I think it can become a little bit dirty in the details, right? And things that come to my mind is KYC, which all the UK companies are very spoiled with. But when you now, for example, us having different KYC procedures in different countries, that's not ideal. Yeah? It comes to thinking about AML procedures. Once I want to go local, like you mentioned local islands before, you suddenly have to adhere to local AML procedures and whatnot. Regulatory reporting, like this is all where it's still very local, where it's maybe for a good reason, but let's say there's, at least from a banking perspective, not an obvious reason. There's nothing that inherently makes a certain country more secure or better in terms of customer protection from that perspective. And in that sense, for products like that, I think harmonization, more harmonization could be something that that we as licensed institutes would benefit from. Likewise, from a payments perspective, if I'm thinking, and I mean, Alex, you've been through some of that pain with us. We've been now getting local IBANs in certain markets, and getting access to the payment schemes there while operating from one country has been a bit of a nightmare.
I think local IBANs, from what I hear from Neobank, this is the #1 issue out there, right? I think, and there doesn't seem to be any movement on it, to be honest. What I see from,
well, I mean, like the issue that we have, right, and without going too much into the details, is that in the end, not only you're not allowed to discriminate, but nobody gave a sanction mechanism if you do, right? And then that, like, you know, there's very little incentive for locals to improve the process, I would say. Likewise, when you do get to actually build local IBANs, you then suddenly have to adhere to a lot of what I mentioned before, like local regulatory reporting, local AML, local KYC, whatnot, without those local procedures adding inherent value to the product. And I think in that sense, from a licensing perspective, like just the basic license itself, yes, that's harmonized and that works well. As Mark said, it's not it's a difficult process to go through, but once you've done that, you also have very efficient, I would say, dialogues with the regulator. But once you want to build the product further out, maybe want to localize the product, it can be quite painful and inefficient, and there's no apparent benefit for customers from these efficiency. Like if you would say it makes it more secure, then I would go, okay, maybe I don't like it, but that's a valid argument, right? But at the moment, I don't have the feeling that all the local procedures we still have there are really providing benefits to the customers, and that's where I think we could still improve.
Miri, do you see a lot of requests like from your customers on like local IBANs, and what is PPS kind of thinking about that?
Absolutely. It's driven by the customer's request. And our first question is, why do you want the localized IBAN? And it's very much comes to two things. The end user experience. Some users simply prefer to see FR at the beginning of their IBAN number, and also acceptance. So in particular, countries like Germany and France are notorious where services companies, although they should accept any other EU IBAN, they just might be that kind of an issue with it. And then all of a sudden your customers start having a lesser user experience, which again kind of can affect their stickiness factor. So I think the driver behind localized IBANs is, at the end of the day, very much driven by providing the most seamless service to your end users.
Yeah, makes sense. Thanks a lot. It leads me to another question which we have to answer, which is of course about COVID-19, since that's why we're all at home and not sitting next to each other. I think it offers some nice insights into people's living rooms and attics, and I think it's sometimes funny that, you know, children pop into the conversation. It makes it way more, I think, down to earth in other conversations that actually could help your meetings. How do every one of you kind of see the current crisis also leading to opportunities, right? Because I think there's ample examples of the last financial crisis leading to lots of fintech starting, right? Or other companies like Slack, etc. But where do you see opportunities out of this crisis for either your own company or other companies, or just in general advice for the audience?
So we had an immediate opportunity. If you look at it right now, PPS has worked with retailers during the COVID-19 crisis to very quickly launch volunteer shopping carts for carers or just family members that were helping out with food shopping for those who couldn't leave the house or are still stuck because they simply fall into that vulnerable group. But that was more about our immediate response to what's happening, and also showcasing how quickly we can get the solution into the market. But I think longer term is the bit that's really interesting. We absolutely seeing a boom in the requests for launching and kind of evaluating different fintech-based solutions that are out there. So if anyone ever asks me, well, aren't you bored now being at home for 11th week? I just simply don't get the time to be bored, and it's great. I think really important factor will be, is the solution you're coming up with solving a real problem? And that's how we look at when we're starting up new partnerships. Have you designed a solution, and now you're going to think up a problem that this could potentially fix? Because if that's the case, that's going to be a very short lifespan for that kind of program. Have you identified a real life problem and you're trying to build a solution to fix that? And we think that those kind of programs really going to be here even long after the virus. It doesn't disappear, but it's at least kind of more controlled. So yes, this is definitely, while it's a really a sad time and stressful time, it's really time for opportunities for fintech to shine.
Mark, Max, any thoughts?
Yeah, I mean, it's a tough question to answer when as Mimi was saying, we're in the environment when people are still dying every day, and people are losing their jobs, and people are being furloughed, and people are hard up, and for us to sort of, you know, move away and think about business is tough in those circumstances, but that is the backdrop we're all operating in. But yeah, of course there are opportunities as well as those challenges. It's massively moved the move towards digital. Local shops that were only taking cash, and only taking sort of £5 minimum digital transactions, are now taking them all now, of course. So it's certainly hastened the move towards digital. But I was talking to a lady called Joe Dewar, who's a CEO of GPS, only last night, actually. We sort of regularly catch up. They're our card processor. And she was saying the volumes were down by 45-50% in terms of card transaction volumes, but they're up a bit by 25%. But you know, overall transactions are down in terms of use of card, obviously, because people aren't getting out and about. Currency will be down because people aren't traveling, of course. So it will affect people's business models in this area. And banking's been affected quite hard, of course, because you've seen all the furloughed staff and redundancies from many of the challenges, because people aren't picking up the phone, because they're not losing their cards, they're not losing their phones, they're not having payments being blocked and stuff because they're not doing as much transacting. So therefore people are being furloughed, which is pretty wretched for those guys, of course. But it comes back to, I guess, the point he was making there, really. You know, if your intrinsic business model is pretty strong, then you should be okay. Certainly in fintech, you know, if you're in crypto, more volumes going through crypto than it ever has been. You know, the price of cryptocurrency is generally going up. Bitcoin's, you know, well above 7,000 sterling right now. And so more people have got a bit more time to get involved in things and do the type of things that they wouldn't have done before. So we're finding from a perspective of crypto, our volumes are going through the roof. So it fits with us and our business model. A more traditional banking model, not so good. So yeah, it's horses, of course, depending on what your proposition is. But I think from, you know, if one was just focusing on is it good for fintech? I think generally the use of more digital transactions is good for fintech. It will move people along the track. It will drag the old school banks with us as well. And you know, a few more branches will close, I'm sure. But overall, it will hasten evolution. I don't think that's a bad thing.
Thanks. Max?
Yeah, I think like Mark summarized it really well, right? Also in terms of impact on the business, I think what we benefit from is that we have a strong value proposition in terms of being not only a travel-related product, but also one that's an everyday companion. Yeah, and I think that's something we're really benefiting from. So in terms of card volumes, we're almost back at pre-crisis levels, which is in the end faster than we expected now. But clearly with the caveat that people are spending money differently than before. And it has a revenue impact. I think everybody that's familiar with card knows that. In terms of banking products and growth in itself, like what we definitely see is that understandably, which bank you bank with isn't top of mind when you're in a crisis like this. You know, when you think about, am I gonna keep my job? What do I do with the kids that can't go to school or kindergarten? I'm not going to think about like, should I switch my bank account with my traditional bank because I actually didn't like it, or am I going to stay, right? So what we see is that the pie, so the share of people, total share of people that think about changing a bank account is definitely getting a little bit smaller, at least now at the moment. At the same time, we strongly benefit from the value proposition we have, which is fully digital, which means that our share of the pie overall is getting much, much bigger. Because clearly, if I am considering to change my bank account, I would definitely not go into a branch and start talking to people, start filling out paperwork. So we do have to adapt our business model in a slight way. Wherever we had a strong travel-related value proposition, that's something we have to think about and reconsider, and think about how we can provide value to our customers, even if they don't use the card anywhere in the world, at least temporarily. At the same time, I think there's a strong value proposition in general as to if you think about another bank, we can offer you something that actually works very well in these times, and that's very attractive and continues to be attractive, and that's what we will leverage for sure.
Thanks. Yeah, I think that kind of carries the same message as what Mark was saying. I think everybody's kind of struggling, right? But I think it depends on digitization will help digital companies get out of it quicker, sooner, and better than the other ones. I think that's where the biggest win will be. I think we're kind of rounding it up, so I would like to ask one final question. I think just to bring it back to the core, I would like to ask each one of you to kind of give advice to new fintech entrepreneurs considering, getting access to schemes. What are your main take? What would be the number one advice? And maybe giving a bit of background there of a mistake you've made, because I always get a bit frustrated reading all of these success stories, right? Because for every success story, there's 100 failures. And I think you learn a lot more about failure. So where have you guys kind of thought like, okay, we went down this path, might not have been the best, or have you seen others do it as advice to people starting their business right now? Let's start with you, Miri.
So probably my advice would be choose a partner that can help you along on the journey and help you with the whole process, help you with the know-how, and just don't rush this decision. Really answer yourself a question: why are we pursuing this direct access? What value are we getting out of it? Not short term, but long term. So really have this question answered for yourself, and that's going to drive the rest of your priorities for you.
Mark?
So I wasn't sure if you said Max or Mark.
Oh,
Alex.
Mark. No, yeah, we'll follow that.
You want me to go?
Yes, sure.
Okay, well, I think your point's well made about making mistakes, and I've made a few. And I think as long as you learn from them and get better every time, it's really important that you make them and you improve every time. So from the days when I did Starling, we built that bank for X many £1 million. We built Ziggloo for less than that. So I think the most important thing is I guess understanding what you think you're good at. If you're a tech business, which we are, then you start with the tech and you get that right, and that gives you the platform then to be able to do all the things that you want to be able to do in terms of banking service and FX and crypto and all those types of things. But if you're not a tech business, if you're more of a financial business, you don't know how you do your tech, and you need a quick start, and you need to reduce your barriers to entry and risks. There's PPS type solutions which are great out there, and why wouldn't you do that? But I guess if you passionately believe in strategically dominating financial services in 5 years' time, and you want to change the world, which is sort of a decision, I guess, in some ways that the guys in N26 would have made. They've gone for a banking license. It's quite ambitious. It's quite brave, but they balance that with using some core products to help them on the way. Then that's a sort of that's a good set of decisions. But I guess to Miri's point, think about things carefully. Understand the marketplace. Understanding the vendors that give you some competitive advantage. We built a best in breed fintech more than once, and understanding who fits in and where, what they do, what they provide is really important. I'm not suggesting building everything yourself, because you can't do that nowadays, and there's no point doing that nowadays. But building in best of breed providers and knowing what they can provide, but understanding your core values and what you want to achieve is really important, and believing in it and doing it and getting on with it. I mean, I believe in the fact that, you know, the toughest part is starting it, but you've got to surround yourself by great people and get stuff done. Take some risks, but take some measured risks. And the only reason why you can understand if it's measured or not is if you've made a mistake before, you've got it wrong before. You forget, I won't do that. I need to do this. And but it's sort of standard stuff you hear anyone say, I guess, who's about my age and done stuff. You know, we've made lots of mistakes to get to this point, and it's part of the learning. But understanding the marketplace and understanding what you're looking to achieve and knowing what you're good at is really important.
All right, Max, last one.
Yeah, absolutely. Like I think maybe adding to what Mark said, like I think very much think about where you want to take risks and what are things that affect customers directly. So I think both payments, whether it's cards or bank payments, are both things where you don't want to take too much risk, right? Because they're both things that affect customers directly and where you see an immediate impact. Everything else, you can definitely be more bold with, whether that's getting a license, whether that's the partners that you work together with. In terms of mistakes, I think also made plenty. One that immediately came to my mind is one that I can these days laugh about. It was when we were getting our banking license and we were migrating our first customers to our own product. We shipped the first cards, and after we had shipped the first cards, I think it was like 1 week after we shipped the first cards, one of our partners sent me a photo of his card and said, like, Max, there's a spelling mistake on the card. And I was like, that can not be. That must be impossible. But it wasn't. It wasn't impossible, and it was also nice. Like we had sent out those cards to a few people, and we had ordered quite a few of those cards with this mistake on it. So like if you're still an early customer, then maybe there's a collector's item.
What was the mistake? What was the mistake? Did you put N27?
Luckily, it wasn't that bad. Like, you know, you have a lot of fine print on the card design, and then I think there was like in the word issued, it was issues, so there was an S too much.
Issues is even better.
Issues. So yeah, like it was, you know, it was nothing terrible, but the people that were involved, I think it gave a lot of headaches. Interestingly, customers don't seem to read what's on the card, so it wasn't like we got any complaints, but you know, it was like basically the first thing you ship to a customer after you get the banking license is a card with the spelling mistake. So it was one of the more funny mistakes. So you got to be diligent, extremely diligent sometimes. I think since then it's best practice to print out every new card design in like these huge A1 papers, so you really see everything. Now, I mean, you know, there've also been plenty of mistakes. You might argue whether going to the UK was the right decision. Clearly. Anticipating political decisions is always difficult, and retrospectively, we might have done things differently. I think at the time we decided to go to UK the way we did. We were convinced that it was the right decisions. It was the right decision. And a lot of things have changed in the political circumstances since then. I think you also have to accept that you will make wrong decisions, that you take risks, that in the end you will burn some money for wrong decisions. And that's life, and you just have to get over it. And you also have to make tough decisions. If you realize that you shouldn't have done it, then you also have to decide that you have to mitigate the risk and the losses. And I think that's important. Being able to also admit that you've done, or maybe that you need to revise a decision, is as important as taking the risk in the first place.
All right, thanks a lot. Very candid feedback. Thanks for that. I think we're out of time, so we're going to round it up. I would like to thank everybody for participating, and I'm hoping we can inspire some more entrepreneurs, some more unicorns 5 years from now, and we could say like, hey, we inspired these guys during a crisis period from our homes to set up shop. Thanks everybody. I'm glad nobody mentioned Form 3, so I will just mention them at the end. Essentially, we're a go-to shop for all of these models, right? So in the sense, it makes sense if you have a certain growth model, please reach out to us if you have any questions, or to the participants directly. I'm sure they'll be happy to give you some advice if you're looking for it. So take care, everybody. Stay safe, and hope to speak to you soon.
Thanks, Alex.
Thank you for having me. Bye. Bye. Nice meeting you.